welcome to another major market movements end of the week market review for May 22nd, 2015. I'm Quad G, and in this video we're covering the PM complex, the precious metals complex. Starting off with gold here. The day basically closes as a long-legged doji right here at the end of a downtrend. I still favor more upside as long as we're above this short-term trend line here, which is currently below. Well, it'll be below next week at about right around 1194 or so. And also the 20 DMA, which we'll take a look at in a second. I still think there's a good possibility that we can get another leg higher to fill in, at a minimum, this manic move to the downside that broke below about 1256 back here in February. So yeah, but we're gonna have to. That's gonna be dependent upon keeping above this trend line for sure, and preferably above the 20 DMA too, especially on a daily closing basis. And here we can take a look at that here with the QG3. The 20 DMA is this blue line here, and you see that today's support came in right just above the 20 DMA. So there are some investors here, some traders that are taking interest in the market, trying to keep it above that 20 DMA. So it's a good sign. The QG3 has closed out some, but it still is in a technical bullish alignment, though very contracted. The gold on the weekly, basically just a neutral pattern here, just a negative close down, nothing too exciting there. EWO is still bouncing around sideways here, nothing to show there. We did get a slight incursion above the 60 on the RSI last week, and we've since sold down some back into this mushy middle area right around the 50. So nothing exciting there either, very neutral. And the MACD is still technically open to the upside, so that's bullish. And weekly, we're open to the upside as well. That's bullish also. So gold, I think, though this week's been kind of tedious, I think the midterm trend is still in good shape. We could still see some higher highs to come, but when you're going to need to keep above some key supports, that trend line and the 20 DMA especially. Okay, let's take a look at silver. Zoom in here on silver on the daily. All right, so I wanted to point out how this trend line here was broken. Rule of 4 breakout to the upside back here in March. We popped up and we came back to basically back test this breakout point. That was accomplished, and then we broke out again. There was a quick back test of that breakout, and then we've been cruising up since. You could say that there's also a trend line breakout right about here. Right about here, this trend line here was broken right around 1659. So, and that hasn't been clearly back tested either. So that is a potential target for silver before moving higher. Also, this trend line is a key support as well, and that is currently down here right around that 1654 level also. So I think it's possible for the market going into next week could see a quick dip down, test that support, back test that breakout before moving higher. The 20 DMA is also a key level of support, and that's currently at 1675 or so, and steadily moving upward. So we'll see if the market, especially on a daily closing basis, is able to maintain a presence above that 20 DMA going into next week. This week's close was negative, but not overly so. Really very neutral. Silver on the EWO. Really not much to see there either. And silver came up, did test the just under or just right at the 70 level there, and has backed off some, and that's okay. But to keep the midterm bullish, I would want to see any pullback here stay above the 40 level on the RSI daily. The MACD is still open to the upside, and the MACD weekly is open to the upside as well. So silver still just kind of going through a short-term corrective period here. I think there's still plenty of levels of support, especially around about the mid-16s and higher, that should serve as support with any drop that we may see next week. If those levels of support are broken, then I would say this market is just not ready to advance higher yet, and may want to come down even further. Let's take a look at platinum. All right, so platinum got a breakout of this trend line here and has basically been dog paddling above that line for a few days now, and not really showing any fall through to the upside. The other key trend line support is going to be right about here. So I'd want to see if this is platinum going to maintain a bullish presence here to the upside. I want to see the price keep above this trend line, especially, and that line next week is going to be down here around 1130. The QG3 was in a bullish alignment. We ducked back into what looks like a neutral alignment today, and also closing. Looks like it's going to close below the 20 DMA as well. So we're still got this kind of, it's an indication that we're still kind of in this neutral, range-bound, sideways market at this time. And there is a possibility that we could come down here to maybe to test this trend line again, and maybe test the lower Bollinger Band as well. Platinum on the weekly, we very close to creating a outside key reversal on the week. The market hasn't quite closed yet, so if it comes down and we get a formal close this week below last week's open, and that open was at 1140, get a close below that, that's going to set an outside key reversal, going to set a key high resistance at 1177.40, and I have to say that it's very possible we could see some fall through to the downside into next week if that was to occur while we're up below that 1177 level. EWO still sideways, choppy, and neutral. Platinum on the RSI. We came up and hit the 60 level previously last week, and now we're starting to see this rejection, but we're still above the 40 level, so that's fine. Just don't want to see that 40 level broken. And platinum on the weekly MACD, we're still open to the upside on the weekly, and on the daily, we're open to the upside as well, though contracted a bit. So platinum, I think we could see some more selling next week into these key supports that I mentioned, and then a possible bounce. There's nothing here indicating that the midterm is completely ruined for the bulls, but a point of caution with this week's drop. All right, let's go to LA wave charts. Back here, take a look at gold. So this is the gold micro count that I've kind of picked up here. So far, we only have 3 waves to the upside. So, but since that three-wave top, we've come down and we haven't really produced a solid impulsive drive to the downside either. Looks like three waves down and some choppy sideways movement. So it's hard to say whether or not C of 2 is finished here. There's just no solid bit of technical indication that we've got a reversal. We've certainly come down here and back tested this breakout point. That was expected. So we're gonna have to still wait and see here. Key level support again is this orange trend line, and that's down here at about that 1192 level. Stay above that, and I think there's still a possibility we could move up higher. Break below that orange trend line, especially, and I'm going to say that this only produced a three-legged advance, and the market could be inviting another move to the downside. Here is the long-term 21 to 22 month cycle, and we have seen somewhat of a bounce out of the 21-month cycle here back in March. April was kind of choppy and sideways. So we're coming up on the close of May, and the preference would be to see this price come up and close above 1224 at the end of the month or even higher to help set the stage for a continued midterm advance out of this 21-month cycle and maybe take it all the way for 21 or 22 months to the upside. If we close this month below last month's open, especially, or that open was at about 1183, we get May to close below that. That's going to put the potential reversal in jeopardy, I think. Here's silver, working on this rule of 4 breakout here. I think this week was working on a backtest in the breakout point of that blue trend line. Certainly has done that. And so if we get the all clear, it's done its business here with backtesting, then next week should see another advance to the upside, preferably challenging this key level of resistance up here to about 1850. I would prefer to see at least a tick above it, just to show that that level of resistance is somewhat weak before maybe pulling back in again for a few more days. Silver on the short-term EW here. We got the wave 1, the ABC contracted flat count for wave 2. We got the subwave 1, and now we're working on a sub 2 correction. And it's kind of ugly. It's turned into something that's not preferable. Could C of 2 end it here? Yeah, possibly. But this is not looking very impulsive with its current structure. It almost looks like a bear flag. So I have to leave open the possibility that wave 2 is not finished yet. We could see one more dip, maybe down here into the mid 1650 range or 1675, which is where the 20 DMA is at. And that would land somewhat in the middle of this congestion, top of this congestion, top half, I should say, of this congestion period. And that can be an area of support as well. So see what the market gives us next week. GDX, GDX was in a bullish alignment up until this week. We got this thrust down, closing below the 20 DMA, and now with today's close, it looks like the QG3 is going to be back into a bearish alignment on the GDX. However, if we take a look at the GDXJ, it's still doing a fine job of maintaining a bullish alignment to the upside. And this week, we've just basically contracted a bit, but we've been able to maintain a presence above that 20 DMA. So kind of a conflicted view between GDX and GDXJ. Out of the two, I do prefer, especially with a bottom, I prefer to see GDXJ leading, since it is houses most of the junior stocks, which uh, are a sponge, I should say, for more risk taking in this market. So it makes sense for GDX to be leading here a little bit, as new interest in the miners comes in. They're going to be looking for those stocks that are severely beaten, and GDXJ has been pummeled far more than GDX has over the course of the last few years. So it makes sense for the junior stocks to be getting some more attention than the seniors at this point. GDXJ is still maintaining an upward trend with higher highs and higher lows. Again, the last swing low was at 1928, and even though this week did sell off, we are still well above that 1928 level. Also, this trend line here is going to be a key level support. Orange. And you can see that we basically tested that today. So I would want to see that this market turn around very early next week, preferably staying above 1928 to maintain the uptrend. And it looks like we could get that early next week, as the price action going into the close looks like it's tapering to the downside. This could be an ending diagonal type pattern, finishing up wave C of 2. That's a possibility. You can see that we're now deep into the middle of this previous congestion area, so this would be also a likely spot to be seeing a reversal if we're going to get one. So early next week, want to see maybe a little incremental low, not much, and then a reversal. If this just cascades all the way down here, down to 1928 or lower, and then that's going to be an indication that this market's just not going to turn around. Best to be backing out of positions and actually start looking for low risk possibilities for a short position. Okay, so that concludes our PM complex overview for this week. I hope you all enjoyed it, and we'll be talking to you later. Adios.